quite a few US shares sitting in my portfolio. Even my kids are very impressed with the performance of their US shares. Wow, that's incredible, Adam. I use CMC and Stake to buy US shares, and I realized the other day, I haven't done a product review of brokers. So, time to shop around. What's inside of it? It's from Mumu. Dear Irene, we like your ASX broker review video. We Mumu as a new Australian all-in-one broker that provides good tools for making blah blah. We would like to invite you to review our platform to trade US shares. Perfect timing. Can I roast them? In the past few weeks, I downloaded the brokers apps, tried their features, and crunched some numbers. Even sometimes it means I had to hide from my kids. Shh, I'm hiding here to concentrate. I'm doing a broker review. Now I'm ready to roast. Just kidding. I'm ready to compare Mumu with the other brokers and also talk about why I buy US shares and the US estate and income tax issues that you should be aware of. Now let's get started. I get asked a lot why I invest in US stocks. Australian stocks pay hands-on dividends with franking credits. Why do I even bother to open a US broker account which potentially has more tax issues? And here are my whys. Number 1, global exposure. According to analysis from SIFMA by Q2 2023, US stock market represents 42.5% of the total 109 trillion global stock market, while Australia only accounts for 1.5%. I don't want to miss out on the potential growth opportunities and be a biased sheep only eating the grass near me. Number 2, diversification. We all know the Australian stock market is dominated by mining and bank stocks, while tech stocks take most of the value of the US stock market. ASX dividend yield has been higher than the US market for the past 15 years. By having US stocks and local ASX shares in my portfolio, not only I can achieve industry diversification, but I can also harvest both of the growth of those US tech companies and dividend payouts from the Australian companies. It's like I get to eat both savory and sweet in one meal. Look, there is this added currency fluctuation risk we need to bear. When Australian dollar is stronger, we get to buy relatively more shares with the same amount of money. But I personally is okay with this risk to trade in with the benefits of US shares that I just mentioned that can bring on the table. Of course, buying individual US stocks or US ETFs is not the only way to gain exposure to the US stock market. There are Australian dollar domicile ETFs that packaged up those US companies in bundles in Australian dollars. From broad market ETFs like IVV, IHVV, thematic ETFs like IJH, IJR, or NDQ. Now, I want to talk a little bit about the US estate tax issue. If you buy the US dollar domicile shares or ETFs, which includes the popular cross-listed VTS Vanguard US Total Market Shares ETF and VEU Vanguard All World Excluding US Shares Index ETF. When you buy these kind of financial products as well as individual US shares, there are two types of taxes involved: income withholding tax by the US government and the US estate tax. When we buy US shares from Australia, we are subject to both US withholding tax on dividends. Actually, the US dividend we received in hand is already after this tax, and Australian taxes on income and capital gains. The US withholding tax on dividends is typically 15% for Australian residents because the two countries have signed a tax treaty provided we complete the relevant tax form, known as the WA band for individual and joint accounts, WA band E for businesses. If you don't fill out the form, the tax on the dividends received from the US stocks will be 30%. We typically need to update this form every 3 years, either to the online brokers or the registry party like Computershare, Boardroom, or Link Market. On top of this, non-US citizens are subject to US estate tax regardless of whether they live in the US or not. And US estate tax rates range from 18% to 40% on any US assets, while there is an estate tax exemption based on the value of the assets, which is limited to $60,000 US. It's not very hard to trigger this. Well, don't panic yet. In 1953, US and Australia signed an estate treaty. Currently in 2023, an Australian with US assets of less than 12.92 million will typically pay no US federal estate tax on the assets when something bad happened to you. I think that's a pretty high bar to reach for most people. Now, with those out of the way, let's start to look at brokers that we can buy US shares in Australia. There are 12 of them, but I just want to keep it simple. If I get to the bottom, what I really care about are only 3 things. Does it offer low fees? Is it legit? Can I buy the mainstream US shares on their platform? Because I don't see myself buy unicorn or IPO stocks. And the little bit research data would be a bonus. If not, I can get it from other platforms like Yahoo Finance, Morningstar, anyways. It would be convenient if the platform can offer chat-sponsored ASX shares or ETFs so that I can do a one-stop shop. If not a big deal. Also, I don't consider myself as a day trader, so any platform that emphasizes trading options, futures, forex, or CFDs are not my cup of tea, so that would eliminate Saxo and interactive brokers. Before we look closely at the legitimacy of each broker, let's shorten the list by comparing their fees. There are two types of fees when we buy US shares: brokerage fee, the commission to the broker, and foreign exchange fee. This foreign exchange fee only happens when we convert Australian dollars to US dollars. Sometimes you will see it as FX fee as something BPS. What does that mean? BPS is a short name for basis points. 1 BPS equals 0.01% or 1/100th% or 0.0001 in decimal form. Brokers generally charge 50 to 70 basis points. For example, Superhero, IG, Stake all charge 70 basis points on the foreign exchange. It means if I have 1,000 Australian dollars, I would pay $7 for foreign exchange fee. And if the exchange rate of US and Australian dollars is 1 versus 1.5, I would have $660 left to buy US shares. So what I did for the remaining 10 brokers, I calculated the brokerage fee plus the foreign exchange fee based on an exchange rate of 66 cents in US currency per Australian dollar. Here is the ranking based on the available cash in US dollars. Now, let's focus on the top 5 brokers and look closely to see the legitimacy of each broker. Is Moomoo still on the list? Number 4, okay. Okay, here are the result of my background check. And each of them have their AFS license, which means that they are regulated by the watchdog of Australian Financial Systems, ASIC. 3 of them are public companies: Tiger Brokers, Moomoo, CMC Markets. Pearler is a private corporation, so is Weibo. Weibo is owned by a Chinese holding company that has received backing from Xiaomi, Xunwei Capital, and other private equity investors in China. They all have their US brokers to clear the transactions for US shares. So far, there's no alarming sign for the 5 brokers. In terms of the variety of US shares ETFs that is available on the platforms, it looks like we can all access to the mainstream US shares through each of the 5 platforms. It will be handy the platform offers shares ETFs from other markets, so we can do a one-stop shop with one broker. So let's look at their market reach. All of them offer Australian shares. Now, when you buy Australian shares, you will find they simply offer 2 models: CHESS-sponsored and custodian model. CHESS stands for Clearinghouse Electronic Sub-Register System. Too long. To put it simply, this system is used by Australian Securities Exchange ASX to record the settlement of share transactions and who owns what. And each broker that offers chat-sponsored shares will have a holding identification number HIN. If your shares are chat-sponsored, it means when you buy or sell shares, ASX has a record of you, the investor, owning those shares directly. You receive the dividends directly and you can vote. On the other hand, under the custodian model, the shares are held in the name of the broker on behalf of the investors. It sounds more beneficial for an investor to use a broker that offers chat-sponsored shares. The reason there are plenty of brokers that still offer the custodian model is that it's slightly cheaper that way. Therefore, they can offer cheaper brokerage fees to the investors. From the top 5 brokers, Tiger Brokers and Moomoo don't offer chat-sponsored shares. Since Moomoo invited me to review their platform, I did ask them if they have any plans to switch to the chat-sponsored model. The answer is they are working hard on it, so maybe next year they will. On top of the Australian shares, Tiger Brokers, Weibo, Moomoo, and CMC Markets all offer Hong Kong shares. For those who are bullish about China, you can invest directly in Chinese stocks that are listed on the Hong Kong Stock Exchange instead of American depository receipt ADRs that are listed in the US stock market. On top of that, Weibo offers China A shares through their China Connect feature, and on CMC Market, you can invest in other international markets like Canada, Singapore, New Zealand, Japan, and European countries. Now, moving on to research tools and user experience, I have downloaded all the apps on the phone and tried them on the web as well. Let's look at the ease of use first. The signing up process is very easy with each of them, and less than 10 minutes I would say, although I would recommend you to download the phone app version for the best user experience, especially for Weibo. During the signing up, it will require you to take a selfie for ID verification. In terms of the look and feel, Pearler has the cleanest interface. It's very easy and straightforward to navigate. CMC Markets comes the second, and Tiger Brokers, Weibo, and Moomoo are all very similar. There are tons of information on the page for you to check out. On the other hand, there is almost no research data available on Pearler. CMC Markets uses Morningstar data to display some key fundamental metrics. Although there is no technical buy or sell indicator, it does show a valuation thermometer if the current stock price is undervalued, fair valued, or overvalued. Tiger Brokers and Weibo definitely emphasize the technical indicators, the charting, the order flow, the short positions, which I'm not a day trader, so not really interests me. It's good to see Moomoo put some extra effort in laying out the fundamental data of the companies. If we use Apple, for example, they have additional information about the industry PE level, market share, revenue breakdown by business, by regions, as well as the institution shareholders, which I noticed from one of Weibo's feature, Sage Tracker. You do need to subscribe to the service with $5 per month to see this information. Actually, I was really impressed by the comprehensive information on Moomoo that I could do a full valuation analysis of Tesla when their Q3 report was out without the need to go for other resources. Now, let's look at if there's any welcome rewards to sign up to any of these brokers. Currently, Tiger Brokers offer $50 worth of fractional shares and 90 days brokerage fee trading. If you deposit $2,000 on Weibo, you would get $100 cash voucher and 5.3% annualized return on the uninvested US cash into a money market fund. Moomoo has the most attractive welcome package as they're trying to break into the Australian market. By signing up with Moomoo, you will get one AMC share, which is the largest movie theater chain in the world, plus 180 days zero brokerage on the US and Australian shares, plus free level 2 market data. On top of that, from 4th of December, the uninvested cash will enjoy a 180-day annualized return of 6.8%, and this high interest is applicable to an invested balance of up to 100,000 Australian dollars. The maximum possible total interest rate earned at this rate is therefore roughly $3,350, and any amount in excess of the $100,000 during the 180-day period, as well as all cash balance outside of this period, will accrue interest at 3.75% standard rate. Well, I have to say this is way higher than most of the interest rate normal banks are offering, which is around 5.5% at the moment. If you're interested in signing up with them, I'll leave the link below. Which broker do you use to buy US shares? Is it on the final list? And what are the features that you particularly like? Leave a comment below. My name's Irene. I'll see you next week. Bye.